There are two different types of variable rate mortgages. There are variable rate mortgages that have payments that fluctuate both up and down with the prime rate. And then there are variable rate mortgages that have fixed or locked in payments. Now, if you have one of those variable rate mortgages that have fixed payments, then you want to pay attention because as prime rate increases, there's a little thing called the trigger rate. The trigger rate is the point at which your fixed payment is not sufficient to cover the monthly interest expense on the balance of your mortgage. Let me explain with an example. Let's assume you got a $600,000 mortgage between May of 2020 and March of this year when the prime rate was at all-time lows at 2.45%. Assuming a 30-year amortization, your monthly payments would have been locked in at $2,055 per month. And the breakdown of that payment would have been approximately $1,332 being paid each month in principal and about $722 paid in interest. Now let's assume that the Bank of Canada this September will follow through on the 75 basis point increase that the market is anticipating. That will bring the Bank of Canada prime rate to 5.45%. And as you can see, in this same mortgage, the interest payments alone are $2,200 per month. And what that means is that the original $2,055 per month that you were paying is not enough to cover the interest, and therefore you've reached the trigger point. So what exactly will happen when you reach the trigger point on your mortgage? Well, that really depends on your lender. Each lender has their own unique policies, and they will communicate with you what those options are. But generally, there are three choices. The first is that you can make a lump sum payment to the balance of your mortgage so that the payment that you're making is enough to cover both principal and interest. The second option is that they will give you the choice of converting from variable to fixed. You will now have a new fixed rate payment, and that'll be an amortized payment. And the third option is that you can increase your ongoing monthly payments and remain in a variable rate mortgage. Which of the three choices you prefer really depends on your unique circumstances. If you have any questions about the trigger point, how it's going to impact you and your mortgage, I'm just a phone call or an email away. My name is Christopher Mulder. I'm a Toronto-based mortgage broker, and the door is always open. Until next time, bye for now.